Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Elio D'Amato, and we're talking Lynas Rare Earths Limited, ASX code LYC. G'day Elio, how's it going?
Yeah, g'day, Phil. As always, I've gone into the bottom drawer to try to find ourselves an interesting stock to talk about, and notwithstanding the numbers, which don't necessarily look all that great, I think there is a little bit to get long suffering, well, at least for the last year, investors in Lynas, a little bit interested as to what's to come ahead, because I don't think the story's ended in any way.
So let's start by talking about rare earths. What are they?
Well, look, it's really interesting. I'm not going to bore you to snores with the science, Phil, but depending on who or what you read, if we go to the Lynas website, apparently it's 15 elements. In other websites, there's 17 elements. Either way, it's as the collective, it's known as rare earth elements, or REE is often the acronym that you'll see. But unlike the name would suggest, rare earths are actually not all that rare, as you've probably learned. In fact, the biggest challenge with rare earths, as they do sit in the Earth's crust, is actually finding an amount which is economical in order to extract it out of the ground and do so cheaply and not kill everyone around it, of course. So it's quite abundant. It's quite frankly everywhere. So we need it because, yes, it's used in batteries. In fact, I think it's about 20 to 23% is used in batteries. But there's many other uses for it, like, for example, wind turbines, wireless technology. There's countless other products that it's used for, even pigmentation. This idea that it's somehow wrapped up with what lithium is and battery metals is, yes, to a degree, somewhat correct, but it's not lithium. And I think that really does excite me because, of course, if we're looking for opportunities in a space where the market's at all-time highs, it does mean we have to look at some of the scarier businesses that are out there. So if we're talking about a company that produces a metal that deals with, everything from, cataclysmic converters through to lasers, special glass, there's medical imaging, really, rare earths could be used in anything. That's the moral of the story, and that's why I'm talking about LYC today.
Yeah, and they're the raw materials for so much of high tech these days, aren't they?
Yeah, unless someone can convince me that we're going to use the internet less tomorrow than what we have been for the last 10 years, then I'll probably listen to you. But you're right. I mean, when we're talking high-tech semiconductors, all those sorts of things, rare earths are going to be around. So notwithstanding the recent price decline, which has obviously impacted Lynas and its fellow competitors, that's something to consider. But in light of that, there's still underlying demand for the product, and it's more than just one major use, which is the other thing that excites.
And of course, Lynas has been around for a little while, and they're quite advanced in their processing as well as extraction of it as well, because the regulatory restrictions, especially in Malaysia, where this is done, can be quite stringent.
That's something that investors need to understand, that Lynas, they're not considered to be the new boy on the block. In fact, they're the world's largest producer and extractor of rare earths outside of China. And you mentioned that relationship with Malaysia. They've got a division there, Lynas Malaysia, where they send all their rare earths there to be extracted, separated, which is quite a nasty business, I'm not going to lie. The end product does leave a really nasty after effect, as it were, to which, again, if we're going to use more of these products, we're going to need those regulatory requirements. Over the many years that I've analysed Lynas, which is like over 20 years now, Malaysia's always been a bugbear. For good reason, some would argue, but then in others that it be just something that inhibits the company's growth. Either way, recently there was an issue with regards to Malaysia that has now been sorted. That's been extended to 2026, plus a little additional investment in R&D as well to support the process there. So for all intents and purposes, yes, Malaysia is a core part of the business. It's taking the Mt Weld feed from it. But yes, they're under strict requirements that they have to meet, and for good reason, because like I said, the process of extracting the rare earths can be a very nasty business.
So at 66, this is the lowest stock rank that we've covered. Why your interest, even though the numbers aren't stacking up as one would traditionally expect?
Yeah, look, you're right. It is 66. Look, to be frank, it's not unusual often for a mining company where it can be priced for future events rather than being priced for the current events. I mean, looking at the historic numbers, they're okay. The strongest of all of those, of the quality, value, and momentum, is definitely quality. That's where my eye goes. So currently at the moment, the company has a quality score of 82. Bankruptcy risk is low. Return on equity, return on capital are quite solid. This despite the fact that the company has had a somewhat challenging period in recent times. And we got a real sense of that in the latest production report. So every quarter, a mining company is due to release its corporate activities and its cash flow statement so that investors in the rats and mice as at work can understand really what's going on beneath the surface much quicker than waiting for an official half-year and full-year report. In the case of Lynas, it didn't look good. I mean, on first read, it was quite bad. We saw things like the cash flow statement took quite a heavy hit. Continued investment in capital expenditure continues to bite. And that Malaysia issue that I talked about, which effectively shut down operations there for quite a while as that was in negotiations as to whether they could extend that license or not, that unfortunately really did hinder their production over the quarter as well. So if you're a half glass full type of guy like me, you go, okay, well, all that activity has been priced in. They've had that shut down. The cash burns occurred. I mean, that cash burn was quite significant. It effectively wiped out a little less than a quarter of their entire cash balance. So that's not to be sneezed at, and it's probably why the share price has pulled back as far as it has. But if you hold a candle to the argument that this is as bad as it gets, given the price decline, given the production issues, then that should give some hope and further support that quality score. So even though I expect that score to probably get a little bit worse, as it were, when the actual official results come through, the balance sheet and the entire cash flow statement, all those particular items, then if you can look past that, I think there's a bit of an opportunity here for those that have the risk appetite for it. And as you know, Phil, I generally tend to do. The interesting thing, or one of the interesting things that I found as well, is that the company today is actually a little worse than where it was, say, back at its peak. So back when it was $10, it was double what it is now effectively. And the company actually had quite again, somewhat challenged, but it was a higher overall stock rank score. So it's taken a lot of that impact. We've seen the price come down. The numbers are telling me they don't look good, so I have to look to the narrative for something exciting. And I think there is a bit for Lynas to bring on board, but I am clutching onto that quality score for dear life.
So as you referred to, China dominates the supply of rare earths. Now, they can adjust the supply depending on whatever their geopolitical negotiations are happening at any particular time in the relationship with the United States or Japan or any of the other trade partners. How are you seeing the effect on Lynas overall?
Yeah, this is an excellent point because you're right, Phil. China is the major producer of rare earths globally. Now, wherever you read, be it one website or the other, the ranges can vary from 60 to, I think I've even seen as high as 87%. So it's not for me to question where that actual number sits, but it's suffice to say it's really big. And if you look even down a little further, you were talking about Malaysia and the separation activities and all that sort of thing. You look at China and it's almost a fully dominant position when it comes to separating heavy rare earths in particular. And it's around 90% of total rare earths, which also includes the lightweight ones as well. So you are right. They're definitely a major dominant player, which can control price. And many conspiracy theorists are saying they are having a hand at the moment with regards to the price decline. The US government, to its credit, had identified this as a major risk to their existing supply chain. Notwithstanding coronavirus was rather unpleasant, particularly for those of us here in Victoria, one of the things it did highlight were risks to the supply chain. And one of the obvious risks that came out was this rare earths issue where China does control so much of the supply. So much so that the United States government decided to take the proactive step of co-investing in a number of these projects in order to assist them, of which Lynas has been one of the major beneficiaries, given that it is the largest producer of rare earths outside of China. So the Department of Defense in the US has joined partners with Lynas in order to establish a few facilities, one in particular over there, which is quite large, that the government's supporting quite a bit in order to help break this stranglehold. But this is a multi-year project. For those of you that think this dominance is going to be over by the time the end of this podcast occurs, you're wrong. China still has a very major part to play in all this. And I think its most recent part that we can all look to show you what sort of influence that the company does have is the fact that, just before Christmas, in fact, I think it was about 4 days before, the company put a ban on the export of components that actually are used in the extracting of rare earths or battery production. So there's a whole range of restrictions that are in place. This was just another component that they did. So I just want to let everyone know they didn't just introduce this. But obviously this works in Lynas' favour because, of course, you can dig a hole in the Pilbara and find the stuff, which is great because you need it. But until you actually get it out of the ground and start the extraction process, which is quite lengthy, costly, and also a little nasty, it is quite difficult to do. So Lynas, given I think it's worth around $3.6 billion at the moment, most likely less, I dare suggest. Given it's so large, given that price decline, I am interested, given the curbs that the Chinese are trying to do in order to keep things under control and, basically effectively continue to be dominant, also interests me because Lynas are going to come out the other side. In other words, if Lynas fails, then we're in real trouble. This goal of wanting to extract the minerals ourselves has obviously failed. Therefore, in my mind, as without overthinking an issue, you look at that underlying demand, we're going to need it moving forward. Lynas are the largest producers of it. Their share price has fallen 50%, hence why we're talking about it today.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. And there were recent discussions about a merger with US rival MP Materials, but that's off the table now, I believe?
Look, it actually led to mini excitement, particularly for those of us that like to look at the colour of dust. I won't say it influenced too many people, but it was a big deal. MP Materials is the other major player outside of Lynas on a global scale. MP Materials operate out of California. They have a particular process which takes hard rock and ultimately creates rare earth elements. Again, without boring you to snores, it's not quite as clean, established, and well-flowing as what Lynas actually has. Therefore, it made sense that they were talking to each other, given the fact that, rare earth prices have fallen so significantly as they have, and the, merge or die, as they ultimately say. But really, when I look at Lynas's established operations, what they've done, the length of time they've been doing it, and the nature of their operations, they've further extended Mt Weld. So Mt Weld, which is their main, mine, as it were, out of Western Australia, that continues to do quite well. They recently have decided to extend it. They're getting further EPA approvals in order to do that, and the new resource size will come out later this calendar year, but it is expected to be quite large, which is also quite pleasing. So again, you're right in that instance that merger was occurring, but that now, as of Monday, the 5th of February, that's actually been hit on the head because Lynas came out and they said, look, we're not going to proceed with this merger. We had been having talks with them, but I suspect they couldn't agree on value. I mean, to be frank, I still think, being parochial possibly, that Lynas was bringing a lot more to the table than what MP Materials were, and I think they struggled to find where fair value was, which is no skin off my nose, to be quite frank and honest. I mean, we've seen Lynas be the attention of corporate action before. Wesfarmers was trying to buy them on the cheap back in the day, but they were unsuccessful in that regard. The price went up something like 5 to 6 times from that particular offer price, but obviously it's come back a lot since, but still not as low as what that offer was. So that would have been quite shrewd by Wesfarmers at the time. Don't think anything necessarily changes the narrative that would suggest that they should get involved with MP Materials. So, yeah, I'm quite happy that they continue on their merry way. This extension in Malaysia to 2026 means the increased capacity from Mt Weld. Oh, and I haven't even talked about Kalgoorlie. How could I forget about that, Phil? Kalgoorlie is their processing plant where they're going to take light rare earths metals from the facility at Mt Weld. And part of the processing is going to be there and then shipped to Malaysia rather than being done. So the net effect of that is that it's going to further increase and boost production. So back to my original point, if you believe this idea that they've taken a hit as they had to, that production is as bad as it's going to get, the prices are quite low, then the future looks a little bit more optimistic in my view in regards to Lynas.
So let's dig into the financials. What are they looking like?
As mentioned, Phil, they look terrible. And when you're looking at these sorts of businesses, I do like to go back and really look at the latest cash flow and activity statement, because when you're dealing with these miners, as I said, they do release them on a quarterly basis, which tends to be more frequent than your traditional half-year reporting period. It's one of the reasons why, in fact, I've actually discussed this on this podcast, because, of course, we're in the reporting season, which is vitally important because we get to see the numbers laid bare for all of our stocks in our portfolios and then some. But when it comes to miners, they also give us this further guidance in between. So that's what I've done. I've decided to lean quite heavily, as it were, in regards to this for Lynas. And that's basically it. So I don't think I'm going to surprise anyone when I tell them that our worst measure in regards to the business is momentum. Quite frankly, momentum comes through at 47. So it's been hitting southeast over the last year, a little bit longer if you extend it beyond that. And really, that's not good. I mean, its 52-week high is something like $9.20, I think. All the relative measures are not great. So when you compare its price performance relative to the broader market, they're not wonderful. Further to that, you've also seen a series of analyst downgrades quite consistently, both for EPS 2024 and 25. Again, unsurprising given the recent issues that they've been experiencing. But look, the positive is they are well covered by some 10 brokers. And, for what it's worth, they still have a buy on the business, though I will be honest, that buy has weakened a little bit in recent times relative to what it has been in the past. One of the great oxymorons of investing is that, when the price goes down, value goes up. In this instance, value is still dragging the business down, though. It's important to further note that. It's currently rated at 59. However, I notice over the last 30 days, it's actually improved by 8. Probably got something to do with that price decline. But all your traditional price metrics like price to sales, price to earnings, dividend yields, all those have been coming under pressure, and that's really weighed on the price. And therefore, the last thing we look at is quality. As I said, that's what I'm hanging my hat on in regards to performance, notwithstanding, and it's important for me to note, that cash did draw down quite a bit in the latest quarter, which I suspect will impact the quality score in the coming period. Currently, it's ranked at 82. I still expect bankruptcy risk to be low. The company has little to no debt. I still expect return on equity and return on capital to be somewhat reasonable without necessarily shooting the lights out, but I do expect it to weaken a little bit more. So the financials on a Lynas are probably the main reason why you've seen the price do what it has. You can't lie that. I mean, that's the beauty of numbers. You're looking into the soul of the business, and it's pretty clear why Lynas has been underperforming. But as an investment analyst, I'm always looking forward, as I do with these things. We're getting as close to as bad as it can get for the company in the near term. Assuming, of course, that the price of NRPD or whatever it is, the particular rare earth that they specialize with predominantly, whether the price of that stops falling in the near term and whether these Malaysia issues are behind it. But of course, given that negotiations have to start again in a year and a bit's time, some might say it's like kicking the can down the road. I think whilst Malaysia remains as part of the picture, there's always going to be a little bit of risk when it comes to investing in Lynas.
Well, let's have a chat about those risks. And you can kind of assume that China would have to be one of the biggest parts of any risk to do with Lynas.
Yeah, so I mean, there's obvious risks like China, of course, and its role in the global rare earths community and what it does and how that flows through onto Lynas. The fact that rare earths is bad stuff, it's not like making scented tissues, as it were. There is some really nasty stuff that comes out of it, hence the protracted discussions with the Malaysians in that separation process and what that does and the further reinvestment that has to occur now on Lynas's behalf. You get risks like, the obvious risk of the price of NdPr, which is that rare earth element I was talking about, where if the price of that continues to fall, then obviously Lynas is a bit of a price taker in that regard, where it can only sell its commodity at the price the market's willing to pay. If that continues to fall, that's obviously going to be a continued risk of the business. And then, of course, there's the financials, which, they don't look great. No matter how you paint it, they don't necessarily look all that super. And I do somewhat think that Malaysia continues to remain a risk, notwithstanding the fact that the extension of the agreement was very pleasing. I think we even saw a bit of a bounce in Lynas's price at that time, although it's given a bit of that back now. The fact that it is extended to 2026 is a positive. The company is definitely flagging it as a positive in all its reports. However, old stock dogs like me say, well, okay, what's going to happen in 2 years' time? And I dare suggest a number of analysts are doing the same. Kalgoorlie, the facility there, will help alleviate some of the stresses with regards to that, but still much of the nasty stuff is going to be sent to Malaysia. So this agreement is going to be key. However, if they get their facility up and running in the US, I believe they're spending about $60 billion on it. The Department of Defense is spending another half amount on that. At the moment, that's going to be used just for the purposes of the US military. Is that the catalyst that then ultimately sees them in the very long term move away from Malaysia? I'm not going to hypothesize on that. That'll probably be beyond the remit of the current executives. But of course, that's something that could obviously occur. Are we ever going to do it here in Australia? I think there's going to have to be some very strong lobbying before any of that occurs. But all that aside, at the moment, operationally, the company is still humming. It seemed to manage that Malaysia crisis quite well in retrospect, and looking at the numbers, they did quite well despite the impact that they had. So therefore, again, that argument that possibly things have been as bad as they had been for Lynas, maybe there's bluer skies ahead.
And throughout Lynas's history, of course, is the environmental activists in Malaysia have had a lot of sway over the government and the policies to do with the government and what they're going to do. And, I mean, it sounds quite justified, obviously, because of how nasty it is. But we do need these elements and minerals as well.
Yeah, from the days of President Mahathir, I suppose. We're that old, we can remember that person. But this has always been an issue, and rightly so. The processes had to evolve at the time where they were then to where they are now and where they're going to be moving forward. It's one of the risks of dealing in rare earths. It's why China's been so good at it. I say that with a tongue firmly in cheek. And, if we're going to do this as a listed entity with full transparency, we have to ensure we're always at the top of our game. Because unlike a BHP that can have a Samarco disaster, it's simply just one operation of, multiple hundreds. Lynas aren't in that position. If they have a problem in Malaysia, then it's really going to bite them in the bum. And investors need to understand that this is a real and present risk that they have to be aware of.
Yeah, and in China, they don't seem to be quite as squeamish about environmental concerns, do they?
No.
I mean, you hear stories of toxic lakes that are produced in the production of these materials. Any final thoughts then?
No final thoughts, and other than to say that this is not the typical type of stock I put there, but I think we've all learnt now that just having a high stock rank doesn't preclude you from possibly seeing a big price decline. It's not always about how you're going at the moment. Sometimes it's about looking forward, and Lynas, in that view, I again tend to believe that things have been as bad as they've gotten to this point, and rightly so, the price has declined. But for those wanting to consider adding an element of risk into their portfolio with an eye to the future and underlying demand from our advancements technologically globally, as well as the whole EV car revolution, irrespective of where your position on that particular topic is. I think Lynas LYC is definitely a stock to be having a look at right now.
Elio D'Amato, thanks very much for joining me.
Thanks very much, Phil.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.